I think the ETFs are going to be helpful. Um, people are debating whether or not they're a sell the news event. Like, a lot of people priced in the ETFs, and
Mhm.
is the first quarter underwhelming? It's certainly possible. That money doesn't just pour in as quickly as people think. One thing I would take the under on is people keep saying, well, what if, these tens of trillions of dollars of pools of capital have a 5% allocation, for example, or 3% allocation. And it's like, that's not going to happen anytime soon, most likely. I still think we're very early in this structural bull run, but I do think it's important not to take a bull run for granted. It's not necessarily like owed to you just because the halving's happening
Yeah.
or just because it's on that cycle. Now, I think it's probably still likely over the next 2 years, but it is important to kind of manage your expectations and risk accordingly.
It's been a few days since 11 spot Bitcoin ETFs started trading, presenting a rare opportunity for thousands of institutional investors to invest in Bitcoin directly instead of through proxy companies like MicroStrategy and Coinbase. However, the venture has not been as successful as many Bitcoin investors hoped. Despite the approved Bitcoin ETFs bringing in a record $4.5 billion in transaction volume on the first day of trading, Bitcoin's performance has not been at par with the success of the launch. After peaking at almost $49,000 on Thursday, Bitcoin is now trading at $42,600, a 12% decline since the ETFs started trading. Regardless, renowned macro analyst and Bitcoin enthusiast Lyn Alden believes the decline is just a phase, perfectly in line with Bitcoin's volatility and bound to end soon. During a recent interview with Natalie Brunell, Alden gives her outlook on the importance of certain fundamentals, such as Bitcoin ETFs and the halving event, and macro factors like global liquidity. While she stresses the importance of the first two, Alden adds that macro factors also play an important role in price movements. This is why she counsels that a little patience is needed before we get the parabolic moves everyone has come to associate with Bitcoin bull markets. Alden, in fact, believes we are in the beginning stages of a bull market. Like every bull market, she expects some stormy days, but between now and next year, the widely popular year after the halving, the analyst is certain that everything will fall into place, and crypto prices will really take off. We will now bring you clips from the interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
I don't see any signs that Bitcoin is not going to continue to be correlated with liquidity. So I think one of the biggest challenges, everyone's kind of focused on the halving and things like that. And of course, that all matters. So the ETFs matter, the halving matters. The halving doesn't necessarily matter in the several months around the halving. Bitcoin's ongoing hardening is really important. But if you look at prior bull runs, there's a lot of variability around the halving. And I would say in large part that's because it's actually liquidity that affected the timing more than just the halving. The halving helps set up higher highs and higher lows because it's how much Bitcoin's coming to the market that has to be absorbed, especially in a bear market,
Mhm.
really matters. But the actual timing of 3 months, 6 months, 12 months is, in my opinion, far more liquidity driven. One kind of description I've given is that it's been known for a while that if you have a gold slice in your otherwise 60/40 stock bond portfolio, it improves your risk adjusted returns because there are periods of time where both stocks and bonds don't do well, but gold does well. So, for example, the 2000s decade or the 1970s decade, there are decades where just that slice helps a lot, and yet it's still underallocated compared to what you'd expect from looking at those numbers. Now,
Mm.
Bitcoin is like a rocket fuel version. I mean, if you look at
Yeah.
that, Nakamoto portfolio or other types of resources that show what is adding a small slice of Bitcoin to your portfolio do, and it's like astounding for risk
Yeah.
adjusted returns. So it should, you'd think it would catch on quicker, but some traditional pools of capital just take a long time to make investment decisions. Generally, when someone, a small business where the owner just has majority stake, they can make very swift decisions. There's some publicly traded companies that are still a lot of the decisions still held by the founder. For example, MicroStrategy, they're able to
Mhm.
make quicker, more decisive type of decisions because they have that capability. Whereas, you know, firms that have a lot more spread out decision making, um, it can be a very long time to actually meaningfully adjust a portfolio strategy. So I do think that the ETFs are going to be helpful, maybe less so than people expect right away, but I'm hopeful. I think the other thing that could potentially derail it is a liquidity problem in 2024 or a stagnation in liquidity. It doesn't have to be a liquidity crisis, but it could be that you have just another stagnant liquidity situation. So you have like 6 months of choppy liquidity, choppy Bitcoin, and it kind of lets out some of that consensus steam, and then maybe you run in 2025, right?
Mm.
So I'm not trying to predict any of those scenarios. Like literally, if we look back at the end of the year, if Bitcoin has dipped into like the upper 30s, or if it's already six figures, neither of those scenarios would surprise me because it's such a volatile asset and there's so much marginal difference that can happen. But that's why instead I've been far more comfortable making 2 year outlooks, which is that I really don't know what's going to happen in 2024, but at least I feel like I have a higher conviction of what's going to happen with the combination of 2024, 2025. So you absolutely could have a case where all these people are super bulled up for 2024, and maybe what they expect to happen doesn't, it gets all shifted back 6 to 12 months, for example. I think there's a lot of scenarios like that. So far, we've not really seen any sign of distribution. So, when Bitcoin goes through, kind of major bull runs, normally some of those older holders start to sell into that market strength. Maybe they want to rebalance, maybe they want to consume, now they can finally afford the house they wanted that they couldn't afford before. And so you see some of that distribution as new buyers come in. And
Yeah.
that process hasn't even started yet, based on any sort of on-chain analysis you look at. So I still think we're very early in this structural bull run, but I do think it's important not to take a bull run for granted. It's not necessarily like owed to you just because the halving's happening,
Yeah.
or just because it's on that cycle. Now, I think it's probably still likely over the next 2 years, but it is important to kind of manage your expectations and risk accordingly.
Outside the expected effects on price, there has been quite a division among Bitcoin investors about the benefits or lack of one of Bitcoin ETFs. On one side are those in support because of the vast opportunities they believe this will bring. People in this category have talked about how thousands of investors could not invest in Bitcoin and other cryptocurrencies directly. That has now changed, and Wall Street is getting full exposure to Bitcoin and crypto. For people in the other category, herein lies the problem. Wall Street is getting full exposure to crypto, and crypto is getting full exposure to Wall Street and traditional finance, which is the big evil people in this category believe Bitcoin was specifically created to fight. During the interview with Brunell, Alden explains that this was fated the moment Bitcoin became such a big asset class. She, however, stresses the importance of self-custody, adding that it might come in handy if the government someday decides to completely halt the industry's growth. Here are more clips from the interview.
I'd point out that the Grayscale Bitcoin Trust already has like 500,000 Bitcoin, and so some of the concentration of custody risks that could happen from ETFs, I would say, have largely already been in place to some extent. Now, the majority of Bitcoin are not held like that. They're more distributed, which is a good thing. But there are some of these big pools that could be kind of either price issues or confiscation issues at some point, and that's not something that's gonna form. That's something that's already there. They're already kind of these big pools that are technically capturable. Um, Another thing I would say is that there's a degree of inevitability to it, which is to say that any large and liquid asset is likely to get an ETF for it, and is likely to get banks wanting to hold it either for themselves or for their customers. So to the extent that Bitcoin was successful, it was always going to face this at one point. It's not like something that can't not be faced. So the question is Bitcoin itself designed in such a way that it's ready for it? I think it is, but that's still another test it has to go through. It had to get through like the block size war. It had to get through some early bugs in the network. It had to get through. There are some countries that banned it and then like flip flopped on the ban.
Hmm.
Um, and there's challenges along the way, and I think this is another challenge that's going to materialize. Um, so institutional liquidity has both a pro and a con. One is the con is the obvious one, which is you don't really want a lot of Bitcoin in ETFs or in highly regulated silos that are capturable. That's the downside. The upside is that more liquidity and more kind of automatic rebalancing of large pools of capital can help reduce the volatility to some extent, which then can make it a better money for people that are using it non-custodially, especially
Mm.
in developing
Right.
countries. Because if you ask people why don't you use Bitcoin, the number one is usually volatility. They don't understand it and it's volatile. And so, to the extent that it becomes larger and more liquid and more kind of widely held, that can actually then encourage more of those small self-custodial type of buyers to enter. So I think that's number one. Um, you know, the other one, I think the biggest challenge is kind of that privacy aspect,
Yeah.
where in order, the government doesn't mind if you have Bitcoin as long as it's in a silo. The second one is okay, you can custody it, but they want to know you custody it and how much.
Yeah.
And then the third one is they really don't want private Bitcoin self-custodially to move around because that threatens their income tax model, that threatens their control over kind of sanctions, that kind of goes against the core of the current system. So they really don't want that. And I think that's kind of the bigger fight that's going to be had this decade is basically that price might be doing well, but that it's not really kind of changing things as much as you'd think because it's held back by some of those frictions. The good news there is that so far it's been very hard to enforce that, right? So for example, Nigeria cut off Bitcoin from its banking system, and they remained having one of the highest adoption rates in the world, and specifically, according to Chainalysis, had the highest peer-to-peer trading volume in the world because that's how they got around the bank blockage. And then we just saw in recent weeks, Nigeria's central bank is like reversing their decision to some extent. They're basically realizing that their blanket ban is not working, and that instead they want to try to bring it back in and regulate it a little bit, which is basically a way of saying we kind of messed up. We also saw India flip flop on this. We might be seeing the process of Argentina, because they had done the similar thing where they didn't make it illegal to own, but they said, okay, banks can't get involved in the space as much as they want. Even fintech companies that are not banks still can't get into it. So they did this kind of series of restrictions to try to slow the outflow from the peso.
Mm-hmm.
But that's obviously probably going to be somewhat different under the current administration. And so we've seen a number of countries kind of bounce around on trying to do that, which is actually bullish because it shows how hard it is to do.
Meanwhile, Skybridge Capital founder Anthony Scaramucci has given his opinions of Bitcoin's recent correction. He believes the price declines are likely due to investors selling off their holdings in Grayscale Bitcoin Trust and Wall Street needing more time to market the new ETFs. He said, "There seems to be a lot of selling of Grayscale. The second thing we are seeing is the bankruptcy estate of FTX is unloading into the ETF announcement. There is a heavy volume of selling in Bitcoin right now. I do expect the supply overhang to be done in the next 6 to 8 trading days." One last thing, there has been a quiet period for Wall Street. Wall Street has not been able to market these ETFs, and that will start in about 8 days as well. What are your thoughts on Alden's and Anthony's predictions and outlook for Bitcoin? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform, Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.